Hi and Assalamualaikum. My name is Nur Shamimi and today I will start the presentation by explaining MFRS 8 operating segments. Firstly, the MFRS 8 operating segment define an operating segment as a component of a company that earns revenue and incur expenses. The results of each segment are regularly reviewed by the Chief Operating Decision Maker or CODM to assess performance and make decisions about resource allocation, and for which separate financial information is available. Next, the main objective of MFRS 8 is to ensure companies disclose information about their operating segments, products, services, geographical areas, and major customers. This helps investors and other users understand the nature and financial effects of each business activity. In terms of scope, MFRS 8 mainly applies to publicly listed companies whose share or debt are publicly traded or companies preparing to issue such instrument. Lastly, regarding reportable segment in MFRS 8 states that a segment is reportable when it meets any of the quantitative threshold, which are 10% of revenue, 10% of profit or loss, or 10% of total assets. Segments that do not meet this threshold are grouped under others. Additionally, there is a 75% rule which requires that if the total external revenue of reportable segment in less than 75% of the entity's total revenue, additionally segment must be identified until at least 75% is covered.
So, let's move to the next question. In this part, I will briefly explain about the role of Chief Operating Decision Maker, or known as CODM, and I will give an example of two companies in Bursa, Malaysia. Before further ado, I would like to give a simple explanation about who CODM is. Based on MFRS 8, CODM is a function, which means in the company, it's more like a body and not necessarily to be just a single person with an executive specific title, like only CEO can be the CODM. Nor, it also can be a group as long as they're involved in finalized decision making. For example, from the company of my choice, Milas Operation Berhad, is stated in their annual report that their board of directors is just CODM. Same goes to Ken Holding Berhad, whereby their CODM is Group Managing Director. CODM main responsibility is about allocating resources of the company. CODM works and decides the distribution of financial and the other resources in the operating within the different segment of the business operation in the company. For example, allocating the staff based on priority and performance. Next, we have assessing the performance. This indicates the CODM need to regularly review the performance and evaluate the information of the segment from operating components such as revenue, profit, or efficiency ratio to check whether it meets the company expectation and objective.
For this question, I choose Maybank to identify and describe the two types of segmental report used in financial reporting under MFRS 8 operating segments. Under MFRS 8, companies are required to disclose information about their operating segments. In Maybank's financial statements, the group reports performance by business segment and geographical segment and disclose for each segment its revenue, profit before tax, total assets, and total liabilities as required by the standard. Starting with the business segment, Maybank is organized into three main divisions: Group Community Financial Services, Group Global Banking, and Group Insurance and Takafu. Each division represents different services and products. For example, Community Financial Services include consumer banking, SME banking, and business banking, while Global Banking covers corporate banking, investment banking, and asset management. Based on the reportable segment in Maybank's financial statement, the highest percentage of total revenue is from Group Community Financial Services, contributing 65.8%. This shows that Maybank is highly dependent on its financial services segment as it represents a significant portion of the total revenue. Meanwhile, the lowest is from Group Asset Management, which contributes 3.3%. Although this percentage is below the 10% threshold, MFRS 8 allows a segment to be reported if the Chief Operating Decision Maker or CODM consider the information to be important. Therefore, Maybank still presents Group Asset Management as a reportable segment because the CODM finds it useful for decision making. Moving on to the geographical segments, Maybank reports its operation across many countries, including Malaysia, Singapore, Indonesia, the Philippines, Brunei, and several others. From the disclosure, Malaysia recorded the highest total revenue and profit, contributing 65.8% of total revenue and 80.6% of total profits. In contrast, Indonesia recorded the lowest with only 5.5% of revenue and 1.8% of profits. In terms of total assets, Malaysia also had the highest proportions of 60.4% in 2024, increasing from 59.5% in 2023. Meanwhile, Indonesia remained the lowest with 4.5% in both years, showing that Maybank's operations are mainly focused in Malaysia. Even though Indonesia's percentage is below the 10% threshold, MFRS 8 allows a segment to be reported if the Chief Operating Decision Maker or CODM consider it's important. Therefore, Maybank still includes Indonesia as a reportable segment because it provides useful information for management decisions. In summary, by reporting both business and geographical segments, Maybank provides users of financial statements with transparent and meaningful information on which area contributes most to the group's overall performance by achieving the main objective of MFRS 8.
Okay, right now we're going to discuss about key benefit of segmental reporting for user of financial statement. As we know, segmental reporting is disclosure of a financial statement that presents the information by separate segment of the businesses in a company, such as product lines or geographical region or division that provide the details of the performance of each part. Some of the benefits of segmental reporting are enhanced transparency and the decision making. Shareholder or investor can get a clear view of how each segment of the business works in terms of profit, performance, and showing which segment contribute more to the company will help the investor choose which place they want to put their money on. And the insight into revenue, profit or loss, expenditure, and can also analyze the risk coming with the segment. For example, Mr. Edward Group Malaysia Berhad divided the reportable segment into geographical segmentation, whereby the company operates in Malaysia and Brunei. Given that the operating segment net profit for the financial year 2022 and 2023 show that both countries operating the business have a significant increase by 20.53% for Malaysia and 111.92% for Brunei within a year. From the analysis of the profit, it indicates that the operation was doing well in both management, which securing the return for the shareholder. Furthermore, benefit of segmental reporting is improved risk analysis by differentiating the result of the financial statement. Users can evaluate the diversity and understand how the economic, political, competitors, or geographical segment poses the risks that affect business or the decision taken by the company will lead to downfall or rise of advantage. Stitches together the 7-Eleven Malaysia Holding Berhad, which consists of two significant segments that pass this whole limit, which are convenience store and pharmaceutical. And the segment under the threshold limit, which is investment holding and real property investment. From this segment, user can evaluate the reasoning, determine the control and evaluate hazard by predicting why some segments are doing well and why some are not, and why the disclosure happened in 2023 when in 2022 it's still operating, while relating to the factors. By this, users can avoid making the wrong decision on the segment that will affect them. Based on the annual reports of the year 2023 and the year 2022, the pharmaceutical does operate in the year 2022. However, in 2023, the operation of this segment was disclosed by the management after completing the disposal when Big Pharmacy Group BHD about the Caring Pharmacy Group from 7-Eleven, which 7-Eleven Berhad Malaysia on a 75% stake, and getting fined from the disposal when the pharmacy segment unable to generate enough profit to cover the company for years already. Through this action, users can analyze the risk or harm caused by the decision of the company. As in this case, the disposal can determine the risk of making a loss and save the company from the net loss risk, as the profit from discontinued operation cover the current year's loss and raise it to the net profit, like what happened in segment reporting of 2023.
Assalamualaikum, my name is Sasha Christina and I will proceed to answer question part B. So what is MFRS 134? MFRS 134 requires companies to prepare an interim financial report containing either a complete set of financial statement or a set of condensed financial statement during the interim period, which is a reporting period shorter than a full financial year, such as 3 months or 6 months. The objective of this standard is to explain what contents must be included in an interim financial report and how the principles of recognition and measurement should be applied during an interim period. It ensures that interim financial reports are timely and reliable, helping users such as investors, creditors and other stakeholders evaluate the company's performance, cash flows and liquidity during the year. The scope of MFRS 134 does not mandate which entities must publish interim financial reports. Instead, regulators such as the government, security regulators, stock exchange and accountancy bodies set those requirements. This standard applies when an entity is required or elects to publish an interim financial report in accordance with Financial Reporting Standards or FRS. Public companies are encouraged to prepare interim financial reports at least halfway through the financial year and release them within 60 days. Each financial report, either annual or interim, is evaluated on its own for FRS compliance, even if past interim financial reports did not follow MFRS 134. However, if a company claims that its interim financial report complies with FRS, then it must follow all requirements of the standard. Moving to the next question, one significant event that may affect an entity's financial position and performance is the write-down of inventories to net realizable value, NRV. A write-down negatively affects financial performance because it increases expense such as cost of goods sold and lowers the carrying amount of inventory on the balance sheet. A write-down is required when the NRV, estimated selling price, less cost to complete and sale, falls below the carrying amount of the inventory. For example, based on a Malaysian public sector, if demand and market price for a product decrease, management may record a 2,000 write-down. If condition later improve, the reversal is recorded, and this affects profit and asset values for the interim period. Inventory write-downs and reversals are specifically listed in MFRS 134, paragraph 16 as items requiring disclosure. Another significant event is a litigation settlement that confirms a present obligation existing at the reporting date. If the court finds the entity liable for a material amount after the reporting period, but before issuing the interim report, the company must adjust its financial statement and recognize the liability and the related expense. This is an adjusting event under MFRS 134 because the settlement provides evidence of an existing obligation. Recognizing the settlement will increase liabilities, reduce net profit, and lowers equity. For example, imagine a company defending a patent infringement lawsuit. After the financial year end, a settlement is reached and the payable amount becomes known. Since the claim existed before year end, the company must recognize the liability and disclose the nature and amount of the settlement. Litigation settlements are also listed in MFRS 134 paragraph 16 as item requiring disclosure.
Hi, my name is Nira Ilham Amani. I will explain for question C. For question C, I have chosen interim reporting on Petronas Gas Berhad. Its accounting periods end on 31st December 2025. And for this part, we are focusing on second quarter from 1st April to 30th June 2025. Interim report includes an audited condensed statement, which is statement of financial positions, statement of profit or loss and other comprehensive incomes, statement of changes in equity, and statement of cash flows. For comparison period, we can take a look at the table right here. For the first one, financial position. Current period for financial position, we can take a look at the end of 30th June 2025 and compare with 31st December 2024. Second, profit or loss and other comprehensive income. Interim report of current year would be 1st April until 30th June 2025, compared with 1st April until 30th June 2024. For year to date, we take 1st January until 30th June 2025, compared with 1st January until 30th June 2024. Statement of changes in equity and statement of cash flow comparison period will be the same. Current period for year to date would be 1st January until 30th June 2025, compared with 1st January until 30th June 2024. In this report, Petronas Gas Berhad used discrete approach where each quarter is treated as standalone period. This means revenue and expenses are recognized for that specific period only. For example, revenue in quarter 1 was Rm 1.594 million and in quarter 2 it slightly decreased to Rm 1.590 million, showing a reduction of Rm 4,000. Lastly, interim reports must be relevant, timely, consistent, and comparable to help investors make well-informed decisions and see company's performance. That's all from us. Thank you.